So guys, today I am joined by Stephen, a prop firm industry professional. He's a trader and he's got a great story of somebody that has risen through the ranks, has got a job in the industry and is trading alongside it. So join us for this incredible story, and that's it. We'll see you in a second. So Stephen,
Good morning.
second time running. We say that because we just did the intro and then there was no sound, so we're basically doing it all again. But anyway, so this is Stephen. Stephen, I've known for a good probably about 6 to 7 months.
It's been a while.
It has been a while, and between that, we've become pretty good pals. And I've always, when I see one of a Stephen setups, I always send him a message because I'm like, that's a Stephen setup right there. But I wanted to bring you on just to briefly, obviously, find out a little bit about your story and see if we can get tips and some tricks for anybody that is new coming into not just trading, but actually prop trading, because it is a new niche, and it's a niche that is kind of it's a massive innovation in the retail trading arena. And now people can actually start trading without risking their own money. It doesn't mean that there's no risk. Obviously, there is a risk, but it takes the risk away from them. And I think you've got an incredible story of somebody that has been a professional in a total different industry for over 20 years. So now that has made a transition into this industry, not just in trading, but also working in the industry on other things as well. So anyway, Stephen, do you want to just tell me a little bit about yourself, or a little bit of what you did before, and then how you got into trading and how you got interested in prop trading?
Sure. Yeah, no problem. Yeah, so my name's Stephen, obviously. I've worked in a bakery industry in an office for wholesalers for 28 years, just in the office there. But
not a short amount of time.
No. Once I commit to something, I stick to it.
Yeah. How did you go into, so you started into the bakery industry, and when did you start looking into trading?
I think it's kind of around about the same time as everyone else. I think around about 2020-ish, something like that. Because it's a bit of a long-winded story, but I was still working at a bakery because it's a food industry, so we weren't thingied at home, stay-at-home thing. We still had to go work. But during that time, I started to make these little circuit boards for the old computers, if anyone remembers the Spectrum 128Ks. Or the Commodore 64, the Amiga 500s.
I bet if Mike was here, he would know exactly. If Mike or Abe was here, he would know exactly what we were talking about. Yeah.
Any of the old early computers.
Yeah.
Sega, there you go, there's one as well. They all had the same memory chips. But after 20 odd years, the memory chips were failing. So there's a little niche market of retro people repairing these machines. And you never know which memory chip is going to work and which isn't. So basically, long story short, I created a circuit board where you can put each chip on, and it tests the memory chip, and it tells you if that chip's good or the next one's bad. But what I resulted was I had a bit of spare cash. So it's like, what do I do for spare cash? Because it was just on the side hustle.
Yeah.
So enter cryptocurrency, Bitcoin. If you remember, it was on its first run up to 100K.
I tell you what, I remember that one exactly, because I read it all the way back down.
Yeah. Well, I read it all the way up and got out right at the peak at the top.
Yeah. Oh no, really?
Yeah. Perfect timing. I got everything out just in time, just about.
That is interesting, because not like, especially for beginner traders, the greed that sets in when you see that amount of money as well.
Yeah, everyone was waiting for that 100K, weren't they?
I was waiting for that 100K.
Yeah, first time was going to get to 100K. I'm thinking it's not getting to 100K. It didn't. It turned about 68, 69K, I think.
Because it made a high and then retraced, continued. And when it continued, that was the moment where even I was like, 100K's in, I'm not even going to look at it anymore. 100K's already happening. Yeah. And it was that touch of that retest of that prior level, and then just completely dropped.
It did, yeah. I was out by then. I scaled out by then. I spent weeks with little spreadsheets trying to work out the best way to get my money out of it to make the most money on as it ran up to that 100K. I left a little bit in, obviously, which I scaled out later on.
That's interesting then. So what made you think like that you were going to see how to get out of it and what the best ways of
Because everyone else is waiting for it to run up to 100K.
yeah. So you
Do the opposite of what everyone else is doing, isn't it?
now this is the exact reason why I wanted to bring Stephen on here, because Stephen thinks a little bit differently to everybody else. And I'm just trying to get that. Where did you get that from though? What made you think that, okay, everybody's looking at 100K, then why wouldn't you be looking for 100K as well?
But it felt like a trap. It felt like a trap, which it turns out it was, wasn't it? So,
Yeah.
but the point was, on the run up about 68, 69K, I think I got everything out and I left a little bit in there just for fun. And that gave me a big chunk of money.
Yeah.
Spare, like you do.
Yeah.
So it's like, what do I do for this? And at the time, crypto, it was a bit of a cowboy market. Brokers were going burst. I remember,
FTX,
yeah, they're
Luna,
all dodgy. I mean, I had
nuts.
I,
Yeah.
I, I was with the big boys, Binance, Coinbase,
Yeah.
but even so, once the money got past like a certain figure, I started splitting it between about 3 different cryptocurrency firms. So my
Yep.
logic was, if one goes bust, I've only lost a third. I'm still okay. So I did that as soon as it got past my comfort level of cash values. So anyway, to cut a long story short, at the end of that, I ended up with a bigger lump of sum of money than I had for my circuit boards.
Yeah.
Nothing too big, enough for a small car or something.
Yeah.
Or I remember at the time I could have cleared the mortgage on the house. So
Wow.
I discussed it with the wife and stuff. It's like, what do we do? Do we clear the mortgage on the house, which is short-term gain? That's great. It's always a good option to do that. Don't get me wrong.
Yeah. 100%.
Or do I reinvest that and learn about something a bit more reliable and stable, which is where I entered Forex trading rather than crypto trading, because crypto trading was dodgy at the time. Whereas Forex I felt was more stable, a bit more regulated.
Yeah.
So I spent a lot of money on education, which I probably didn't need to, but I don't regret it because my education was good and I enjoyed it. We won't mention the firm, but it was a lot of money. And so I did that for about a year and a half, and then I left them and then started trading by myself, really, joining various Discord groups and other little bits and bobs like everyone does.
Was
And just
that in?
buying prop accounts.
Was that on a brokerage account, or was this already in prop?
No, just
with prop.
straight over to prop firms. Yeah.
Yeah.
I think actually initially I was on a broker with the company that was training me, so I put some money into that.
Yeah.
But I took all that out when I left them, and then
Yeah.
went with the prop firm model instead.
Nice.
Because for whatever $500 you can get a 100K trading account. It makes so much more sense.
So that was my next question. Really, is like, what made you go straight into prop firms? Why wouldn't you just put all of the money into a brokerage account and use that?
Yeah, that's a good question, isn't it? Because I spent most of it on education and training.
Wow.
And building this PC here, and I paid off some debt as well.
Yeah.
In fact, I'm still using the same PC. I've upgraded a little bit.
Cracking.
What else did I do with it? Oh, I paid for Christmas. We had a good Christmas that year as well.
Yeah.
So,
Amazing.
like I said, it wasn't enough to retire from, but it was enough to have a
What
good
was
time.
when you first got into prop, what were it wasn't obviously smooth sailing, and it probably still isn't smooth sailing. Like, even I just told you, I've been having some really ups and downs as well. You can have an amazing run up, and with trading, sometimes when after an amazing run up, sometimes comes an amazing run down as well. So you have to,
Comes to fall.
yeah, it is just one of those Murphy's Law. You've got to really keep on top of it. So tell me a little bit about your journey through prop initially. What were like kind of the hard things and the good things about starting into prop, and tell me a little bit about that.
I think really it's basically the same as everyone else. You buy a prop account, you lose it,
Yeah.
in a month or whatever. You
Yeah.
think you've got it. Oh, you know what you're doing. You've got the H4 and you're just
Mhm.
following the trend. When it pulls back to in the EMA on the H4, you just randomly buy in, stop loss below, whatever. And you think you got it sorted. You buy another account, you start trading it, and then you're like 7% in drawdown with maximum of 8 or 10% drawdown. So what do? You chuck maximum lots you can on the next
Yeah.
morning in a random direction, hoping to recover the account. And then sometimes it would, so then the account would be dragged out for a little bit longer. And then other times it would blow the account and you were happy because then you could
Yeah.
just buy a new account and start again.
And
So
it does happen as well, because
yeah,
sometimes, and that's the thing with people, need to understand the prop firms are there obviously to back traders once a trader can show that they, you know, they have the ability. But sometimes if you don't pass the test or you're so far in drawdown on the test, it's not a problem, but sometimes it's actually better just moving on and getting a new test. And that's, I've
yeah,
done that
yeah.
I've done that in the past, because let's say you got a target, some of these firms, you know, you got a target, let's say 10%. And if you're
Mm.
9% in drawdown, you've got 19%.
Yes.
Well, it's not even 19%, it's all, you know, even way more above that, just to get back to first
Mm.
where you're at, and then you've got to
Of course,
even
if you're
more.
that much in drawdown, chances are your risk per trade is going to be lower as well because you're so close to the maximum thing. So it takes even longer to pull it back out.
So sometimes
So
if
yeah,
you've already on the wrong foot, let's say, in your evaluation, sometimes new evaluation, clean slate, and just go on the test again. That is definitely a tip that I would say to traders, and something that I've done as well. Okay, so you started off all the
because
ups and downs. What were the kind of,
all the usual stuff.
yeah, all the usual stuff? How do you think, like little tips for somebody that is looking to get funded by a prop firm, or what would you kind of give them just to get them started, maybe before they go and get the firm, before they go and get an evaluation, and when they're in the evaluation, what kind of tips you would give to them?
You know what I'd say is don't go for those big evaluations. Everyone wants the 100K one
Yep.
because it's 100K. Everyone wants a 100K challenge and they want
Yeah.
to trade gold. Why? Because those two things sound cool.
Yeah.
Yeah, I got 100K trading gold. Yeah,
Yeah.
it sounds good. No, just scale it down. Go for
Yeah.
the 5K ones,
Yeah.
10K. I still go for the 10K ones and
Hmm.
5K ones, but I have multiples and then I
Yeah.
trade copy my costs and stuff. But go for those smaller ones. And then when you can hold those and pass those, or at least you're not blowing those every month.
Mm.
Because if you're buying these 100K ones and then you're blowing them each month, it's costing you a lot to learn. You can
Yeah.
do exactly the same on a 10K
Hmm.
and just scale it down by a tenth. And then when you're not blowing those every month, then maybe consider getting 20K or 50K. But you can
Yeah.
guarantee the second you get the higher account, that will be the account for blows.
Yeah. No, I agree with that, because I think it's also the fact that you want to show yourself as well that you can do it as well.
Mm.
When you're first coming in, you need to show yourself that you can pass an evaluation. You've got the ability to do that. And then from there, once you've put in the reps, all it is then just scaling the account and getting a bigger account. And the first
Yeah.
step is doing the small accounts, because when you go to the big account first, one, you might not be used to that much money and that much risk. And sometimes that can take you as well a little bit of time getting used to. And it could be quite
Let me tell you some. Let me tell you something about risk
go
and
on
getting
then.
used to the values.
Yeah.
I remember like when I first started trading whatever account it was a few years back. My risk was $2 or $2.50
Amazing.
on for a good while. Yeah, and to me that was like, wow, I've made $10. I've
Mm.
lost $2, but you can't just jump in risking $500 per trade because it messes with your mind. I mean, admittedly, $2 was really low, so I had to work myself. Like my friend said, put your big boy pants on, Steve. So I did, and I went up to $25 risk per trade, and then I remember it's 50, and then I managed to push myself up to 75, and eventually it was $100 per risk.
Hmm.
And now after That was a couple of years ago. Like, so now I risk, what do I risk? Oh, like $800 per trade on one of the
Mhm.
accounts,
Mhm.
and it doesn't affect me.
Mhm.
But if I'd gone in that first year, $800 per trade, you got
Yeah.
no chance. You got no chance. That's a week's wage in the UK, more than a week's wage in the UK.
That's the thing. I think when you're not focused on the money and you're risking very small,
Mm,
you force yourself to only really focus on the technique. And it's like, again, like going to the gym and you're benching. Okay, instead of going through like 100 kg bench and hurting yourself and pulling a muscle, instead you're starting with the bar, you're getting the foundations, you're progressing, then you put a little bit of weight on, you're pushing that, and you're getting stronger and you're stronger, and eventually you're pushing some incredible weight. I did the opposite. I went straight in, balls deep with massive risk on crypto, and I lost a hell of a lot of money. And somebody asked me today in the live trading room, what
mm.
would be your um, tip for somebody trading crypto? And I said, not using any leverage, because leverage and risk is also it's a very addictive thing when you're seeing big numbers move and you get yourself used to seeing big numbers. Also, that dopamine and that feeling that you get, that thrill, is also very detrimental to your progression as a trader, because when you connect those two things together, you're connecting then big money, even if it's losing or if it's winning, into a feeling. And that can really cause your time as a trader or your time to get profitable or even break even to be a lot longer. So I really love the fact that you started off on $2 risking it and now you've
Yeah.
to $800. Like, if I could say the
Yeah.
perfect way of doing it,
But
that would be
you know
it.
what? You know what? That 800 is trade copied across 5 accounts as well, so it's actually more. But I don't see the other side.
But that's the thing. You can only do that properly once you grow properly.
You've
I
got
always
to
yeah,
acclimatize yourself. Yeah,
yeah,
yeah. It's a slow
100%.
progress.
Yeah.
If you're trying to push it and you're just looking for the money, it's greed, and you're not going to make it.
Mhm.
In fact, one of the things I learned from you watching you trade was to care less.
Yeah. Sometimes I care a little bit,
A little bit too little, maybe.
yeah, too little sometimes. I should care a little bit more, to
That's
be
it.
fair, sometimes.
But yeah,
Because
I mean, I used to, like I said, I was blowing accounts all the time, and then at some
mm,
point, I remember just before Christmas one year, I was no longer blowing accounts,
yeah,
and I was a break-even trader then from
yeah,
Christmas for 6 months or
yeah,
something or more, and that was good because in
mhm,
my eyes, the me now was better than the me
yeah,
before Christmas, if you like.
yeah.
So
And
it just needed that little bit more of a nudge to go from that. You've gone
and
from losing accounts to break-even accounts
it's
to profitable
milestones.
accounts, hopefully.
That's, people think
Yeah,
it goes from losing a lot of money to making a lot of money.
yeah,
That's what they think. But it's not, is it? It's like
no.
losing a lot of money, losing a little bit less,
Hmm.
losing a little bit less, losing a
Finding
lot
it
of
hard to actually
money,
lose an account now.
to break even, to and it just goes like this. But each time, as long as you're going 2 steps forward, maybe 3 steps back, and like, or all of this, as long as it's a small progression, it goes to the break even. You're making a little bit of profit, you're making a bit more, and you're just progressing. And that's the career that I look at as trade. If you want to be a trader, especially in this retail space, you have to understand that journey. You can't think of it as like, okay,
Mhm.
you're going from zero to losing money to then making a lot of money, because it's just not
Yeah.
true.
You can look at that with the prop challenges when people pass them in 1 or 2 days. It's no good. It doesn't
Mhm.
teach you. It doesn't give you the confidence that you're going to have long term consistency if you've passed your challenge in 2 days.
Yeah.
It's taught you nothing.
Yeah.
So I've never wanted to say take a 10K challenge, pass it the same week, and be funded
Mhm.
the following week, because that
Mhm.
hasn't taught me anything. The following week and just blow it, or I haven't
Mhm.
built the confidence in myself and my setup to
Mhm.
know that I deserve that 10K, if you like. So you got the imposter syndrome setting in then as well. But
100%.
you also haven't earned it.
Yeah.
You've just been lucky,
Yeah.
passed it, and then you'll just lose it next week. So what is the
Mhm.
point in fluking it past the challenge? You
Yep.
need to do it properly in the first place.
How do you feel when somebody is coming in learning trading? Do you feel they should go the route that you've done, as going straight into prop firms and not risking their own money? Or do you think it's probably better now, looking back, if they put their money maybe in a brokerage or their thing and just trading that until they have got the skill and then go to a prop firm? What do you think? What's your opinion on that?
I'd go prop firm, but on the cheaper accounts on prop firms, you can get a 10K prop firm for what, $80, $60,
Hmm.
more than enough to trade with, and then scale it from there.
Yeah.
Definitely. I wouldn't put your own money in straight at the start. I did.
Hmm. Yeah.
I lost once, took it out, went on the prop firm thing. I'm actually putting money back into a personal account this week, but that's a different story.
Yeah.
But then you also got to transition slowly from, you can't just jump full time into trading either.
Yeah, that's the funny thing, isn't it? It's like I went straight into crypto,
Hmm.
massive leverage, futures trading, lost a ridiculous amount of money for me back then. And then deciding not to do that again. Now I'm going to risk somebody else's money going into prop, and now making money in prop. Now I'm deciding then to put my money into my personal account so I can grow that. And it's like this whole big circle that I've done. If I was to do it again, I would definitely, go to the prop, learn how to trade, go to the bigger accounts, and then use that to leverage that to build my own funds that I
Yeah,
can then go and trade on my own.
100%.
Yeah,
That's
definitely.
the right way to do it. Yeah,
Yeah.
props, small props,
Yep.
learn on small props, bigger props, take
Yep.
money from the bigger props, put it into personal, trade copy across the two, continue to get props and
Mm-hmm.
trade your personal, and build your personal capital that way
Yep.
is what I would do.
Where do you feel like scaling props now? Do you scale the account, or because I know you just said that you trade copy and stuff, you just buy more accounts and then copy them over? How do you
Yeah.
scale once you've got the skill and once you've been able to start trading properly? How do you scale that? How do you make more money? How do you do that?
Well, I don't think you, you don't need a bigger account. You need more capital. You don't
Yep.
need to make more percentage to make more money.
Yep.
If you're making 2% a month, whatever, on a 10K, that's what, 200 quid a month. You can't
Mhm.
live off that. But you don't have to then make 10% a month. You still make 2%, but you
Mhm.
give yourself more capital. Maybe buy a 20K, so then you're trading 30K. You're making 600 a month, but you're still only making your 2%.
Yep.
And then you can add a 50K and a 100K, and then all of a sudden you got like 13 accounts like I do, and you trade copying 5 of them across.
Yep.
And your 2% is a bit more significant then, but spread across multiple accounts, obviously.
That's the
That's
thing
that's
about
what I do. People
trading.
they
It's
they concentrate on the one account too much. I got this 100K account. I got to get up to that 4 million target or whatever the maximum is with your thingy. You don't. It doesn't matter, does it? Stop
yeah,
chasing the money.
it's all great for marketing, and even we do it here at Funding Rock.
Mm.
You can get up to the millions if you want it.
Yeah,
In my opinion, waste of time
yeah,
even putting that as a goal. Like finding
mm.
passing one account, getting another, passing another account, combining them, doing exactly what you've just said, of just getting to those base hits, 1%, 2%, 3%, get to the 5%, and then suddenly you're 5% off a call of your accounts, and then you're getting those payouts. If you can do that each month, suddenly now you're building capital and you're building money
Exactly,
that you
and
can put in.
definitely 100%.
Wicked.
Mm.
Where do
Definitely.
you feel like this industry is going now? Because I know that you're working in the industry as well, and there's a lot of brokers coming into the prop industry, and more traders are finding out about what prop is. Where do you see this growing? Do you feel like this is going to take over from the traditional type of broker trading and things like that? Where do you feel like it's going?
It's an interesting one, isn't it? Yeah, yeah. So since I work from home full time now, or trade from home full time, I actually also work in the trading industry.
Yeah.
Uh, sort of educating people about prop firms and
Yep.
reviewing prop firms. So you better watch out.
Yeah.
And things like that.
Where do you feel like
So
they're
yeah,
going? Yeah.
wait a what? Sorry.
Where do you feel like the industry is going or heading towards?
I think it's going in a good place. I've seen some new things come out and stuff, and
Mhm.
I think the 3-phase accounts are sort of dropping off a little bit, aren't they? And it tends to be 1-phase and 2-phase, maybe. 2-phase is a good happy medium, I think.
You feel 3-phase is not so popular with people anymore?
I think so. I think so. They're good. They're good for learning because they're cheaper,
Yep.
But who in reality wants to make 5 or 6% 3 times in a row
Yeah.
before you get funded and then you
I
blow the
know.
account?
Yeah.
But the 1-phase ones are nice.
Hmm.
And don't get me wrong, I do go for the 1-phase ones as well.
Yeah.
But I think a happy medium is sort of 2-phase at the moment.
Yeah. I
The
think that's like
instants are
the industry
instants are a
standard.
bit
Yeah.
broad. But it
Yeah.
seems to be now, doesn't it? I think initially the three-phase was quite popular, but I
Hmm.
think 2-phase is like a standard now.
Hmm.
The instance is a bit more of a newer thing. There seems to be a lot more instance popping up. But when
Yeah.
you look at the finer details of them, half the time they're just not worth it, to be honest. The price of them, the amount you have to pay for like a 10K 2-phase might be $80. A 10K instant might be $300. It's like, but then you're also limited on the instance when you look at the finer details. So
Stephen, last question before we call it a day. You mentioned about going full time, but you've done it in quite an interesting way. Now, a lot of people think about full time trading as they make a little bit of profit and they just cut the job and they go straight in to their trading. And I see a lot of mistakes when that actually happens, and I feel people do it prematurely. You've taken a different approach to that. Do you want to let us know your approach and why you feel that may be a little bit better than just going
yeah,
full
sure.
out to full time trading?
No worries. I think it's similar to most of my other approaches when it comes to the trading prop firms and trading companies and everything like that. What I did was for the last few years, each time it came around to a pay rise at the bakery where I was working, I told him, no, don't give me a pay rise, keep my money the same, but let me drop a couple of hours each week.
Mm.
So that's what I did.
Mm.
So I'd pick a day that I wanted. So Friday's no good for trading for me. Monday started the week. So I think it was Tuesday I started to drop hours. So the first year is like, what did I do? I dropped a couple of hours, but then I also took a small pay cut. So basically I was getting the same money each
Hmm.
month, but working a little bit less hours
Yeah.
because by neglecting any pay rise offered.
Hmm.
So say just a random figure, but say the pay rise can be 200 quid a month or something. I just knock off the equivalent of £200 a month's worth of wages of
Hmm.
hours
Yeah.
off my weekly work. So I think Tuesdays I ended up reducing my hours, so I was going into work a couple of hours later. So every Tuesday I had a couple of hours in the morning to set my trades up, in the London Open before I even went to work. And then eventually I think Tuesday got down to, because originally I was doing 42 and a half hours a week at work, Monday to Friday. And then at last count, I was doing about 25 a week. And now I'm at home full time and I do way less than that for just a
That's
couple of hours a day.
that's
but, but, but
amazing.
that's all I did each year. So, but then at some point, the Tuesday hours got so low that I was only going in for a few hours. I said, well,
Mm.
just drop that altogether. Or I started reducing the Wednesday hours and stuff. Depends on your work, where you're working
Yeah.
at. You can do that, obviously. But if you can survive on the money you get in now each month, then when the pay rise comes along, it's greed again. Rather than trying to grab the extra money, which everyone wants the extra money,
Yeah.
we were surviving fine on the current wage,
Yeah.
so which was not a lot. It's not a
Yeah.
lot. Don't get me wrong, but where I live in North Wales, you don't need a lot. We're not down in London or anything.
Yeah.
So I'd pay off some bills and stuff. I remember there was a small chunk of my mortgage,
Yeah.
and it was a huge portion of the mortgage payment. It
Mm.
was literally a tiny portion of the mortgage capital, but the interest rate and everything is a huge chunk. So I paid that off, and that
Mm.
allowed me to reduce my hours even more. So eventually I was going into the bakery like just Tuesday afternoon, not at all Tuesday, and
Yeah.
later on a Wednesday. So I was
Yeah.
only in the office full time Monday, Thursday, Friday,
Yeah.
and then not at all on Tuesday and a half day on Wednesday. I think by the
Love
third year, I'd started dropping it even more. So the
Yeah.
Thursday started taking hits. So
I
by
love
then
that
I was
way.
at home.
Yeah.
Yeah,
Obviously, it
it
depends on your manager. I wonder if
depends on the business, doesn't
yeah,
it?
it
Yes.
depends on the manager, but suddenly like yeah, I could just imagine your boss or like somebody's boss. Suddenly they're getting paid full time wage and they're there like twice a week or something like
Yeah,
that. Maybe yeah, it
yeah,
could
exactly.
happen.
I was and
Yeah,
still am.
that's amazing.
So I was only going in Mondays and Fridays and half day Thursdays.
And then eventually it transitioned to you're going to take the leap after.
Yeah.
Because I think the biggest thing as well, just adding on to that, the biggest thing that I see with newer traders taking the full time, cutting their work and going full time in trading, they have this initial excitement, like everything's really, really
Yeah.
exciting. And the issue is once that dies down, they can make a lot of mistakes because they're so excited and they can then start over risking, over leveraging because they need
Well,
that money for
you need the
things.
money. You need the money to pay
You-
your mortgage that month or your rent or whatever. So
yeah. And it's
the
extra
way
stress.
I did it didn't need it because all of that's
Yeah.
covered. Cover your bills. I mean, if you've got a part time job, whatever, reduced hours, get the hours at home need to be the hours that suit your trading.
Hmm.
So I remember Tuesdays and Wednesday mornings were my best trading days every
Yep.
week because I was at home. So although I could look at the charts Monday, Thursday, Friday as well before going to work,
Yeah.
Tuesday and Wednesday I could literally sit there and trade the London markets. So Tuesdays and Wednesdays are always better days. And
Yeah.
then Wednesdays became a good day. Thursdays became a good day as well. And
There
then
you
I
go.
never trade Friday really.
Yeah.
Well, I do a little bit.
I
I do a little
I
bit.
tend to lose
I try
more
to
on
give myself a day
Friday.
off on Fridays.
I tend to lose a lot of money
Mm,
on Fridays, especially
mm,
because throughout the week I've done really good profits and I always end up in a Friday
mm.
overly confident. And that overconfidence
Yeah.
always ends up me getting over leveraging and getting
Mm.
hit. And I still do that sometimes,
I always
and
call
I've been trading
Fridays
for a while.
Friday.
Yeah.
Yeah, I know. Fridays I always call smash and grab day.
Yeah.
So if
You
I
either
do trade
make it or you
Friday
break
and
it
I'm
on a
up
Friday,
whatever half a
definitely.
percent,
Yeah.
yeah, I
Oh,
won't run for the big profits on Friday. I'll grab
yeah.
0.5% and be done just to top the week up, and that's it.
Nice. So one last thing then, two last things. Any tips that you would give to any new traders coming into prop or coming into trading?
Tips would be don't chase the money.
Yeah.
One of my friends always used to say to me, "There's two phases of trading: you're learning to trade or you're trading. When you try and combine the two together, you fail because
Mhm.
you're trying to learn to trade whilst trading."
Yep.
He always says you should be either learning to trade or trading. Obviously, when you're trading, you're still learning as well. But
Of course.
when you're trying to learn to trade and trade, initially you're
Yep.
losing, and that comes from going for those bigger accounts, trying to make the money again.
Hmm.
So that would I'd say calm it all down. Don't chase the money.
Yep.
Um,
Perfect. And
would be my main thing to say for any new trader. Yeah.
amazing. And last thing is if anybody wants to follow your journey and follow everything that you're doing and keep into contact with you, where can they find you? Where are they going to find Stephen on YouTube or Instagram or wherever that
Well,
you are?
that's a bit of a tricky one. That's a bit of
Yeah,
a tricky one. I am out there. I
yeah,
had Stephen V Trades, as you know, on my YouTube channel,
good stuff.
which I started this year.
Yep.
So that was building quite well. But I
Okay.
think part of that was again, if you're not very good at things or nervous about things, because I remember I was always nervous for things like that.
Yep.
I forced myself to do, and that's what
Yep.
I did. I remember going on my first stream with you and Mike.
Yeah.
Because I think you guys are live on the stream, and then
Yep.
I was there. It's like, oh, anyone can join. I just
Yeah.
forced myself to. But when I came off the stream, I went upstairs to the wife, sat on the bed, and I was like, So,
You look,
like a cold, clammy
you
sweat.
didn't look nervous at all. That's the funny thing. You look like an absolute natural. So
I was an absolute state when I went upstairs. Like that
amazing.
first one, I remember that.
Okay.
But then the second time on live stream, it's
Yeah.
just you finish the stream and then you carry on trading, whatever.
Yeah.
So you got to
100%.
push your boundaries a bit.
All
But
about the
it's same with,
repetitions. All
yeah,
about
and
the repetition.
pushing your boundaries. If you're a little bit uncomfortable, do it.
Yep.
If you're too uncomfortable, you're going too far. But it's same for cash bounce you're risking. If
Yep.
50 quid makes you a little bit uncomfortable,
Mm-hmm.
that's okay. 50 quid makes you panicking. You're
Yep.
going too quick, too fast. Drop it down to 25.
Yeah. 100%.
But I went a bit off topic there. Yeah, to contact
Nah,
me,
there you
you
go.
can stalk me
Stephen
on
V
Stephen
Trades.
Trades on YouTube.
I'll put it in the description for anybody that wants to follow Stephen and follow his journey, because he puts definitely some of really good
Has
content
gone a
out.
it's gone a little
Yep.
bit quieter on there now because obviously I'm working in a prop firm with another
Yep.
company.
It gets
So
busy.
I'm spending a
Once
lot more
life gets a
time.
little bit busy, I've been also my own YouTube trying to do stuff and trying to trade prop and build a prop
It
firm
does. It
and
does.
do it.
I'm, wor-
It's
I'm,
busy.
wor- I'm,
Yeah,
I'm, I'm,
definitely.
wor- I'm working. I'm working for doing the prop firm reviews and stuff, and then I'm also working for the bakery still. Because when I left them to work from home, I said I'll still do a couple of
Help
hours a
out.
day doing phone calls. Yeah,
Yeah.
it
Gosh.
swings and roundabouts, isn't it? And then
Yeah.
plus on top of that, I'm trading every morning. But I finish all my trading by about 11 o'clock in the morning. I only spend a couple of hours on it.
That's great.
8 to
Yeah.
11, something like that. And then I'm done for the day. I don't want to be sat at the chart all day long every day, which is also why I give myself Fridays off, usually. Not always.
Nice.
Depends what the markets are like.
Yeah. Well, there you go. So thank you, Stephen. Thank you very much for joining us and telling us and give us a little bit of an insight in your story, and also some of those really important tips for newer traders. And for you guys at home that are watching, give Stephen a follow his journey. Make sure you're following and you're subscribed to us, and keep an eye out for more stories from traders to get some of those really important tips and knowledge before you actually go and get funded yourself. So see you soon, guys. Bye. Take care.
Thank you. See you.